and something that can be usable on a day-to-day basis. Obviously, today we would have wanted to talk about the budget event, and to our dismay, I think. Sorry, let me just try and go forward. Sorry, let's go back. That's it. So yesterday, as we were anxiously waiting for the budget speech to commence, we were informed that the budget speech has been postponed. The biggest reason, obviously, is that the proposed VAT rate would have increased from 15% to 17%, and the DA then said, no, we are not going to approve that, so back to the drawing board, and then the budget speech will probably be held on the 12th of March. So we have preliminary scheduled that we will have the tax chat on the 13th of March, the following morning. We will then talk about the budget. In all of this, it is a weird time, isn't it? Since the 20th of January, that Donald Trump became president for the second time of the US, so many funny things have happened. Who would have believed that Trump will effectively declare a trade war against Canada and saying that he wants to invade the Panama Canal, and he'll even use military and economic force in order to achieve that. Certain funny pictures of Elon Musk on social media, and even then the next target is the EU. Now, if you look at all of this, then you get to the foundation of it. Actually, it's all about more global move towards. There was a global move towards globalization. Everybody, the world is small, the world is small. Let's work together and everything. And then since about the first term of Donald Trump, it was more moved towards patriotism. Let us look inward. Let us just protect everything. And everything that Trump is doing is with self-interest. Self-interest, firstly, perhaps. Let's give him the benefit of doubt, America, and then secondly about his own interests, which is obviously also great, and then Elon Musk's interests. So it's all, everything that you look at is all about self-interest. It's about America first. It's about, now, if they're the biggest player in the playfield, let me not call it the biggest bully on the playground, but that is what it is. They are the biggest person on the playground. Everybody else plays around with them, with obviously some people challenging the authority, like China, Russia, and the like. So now, unfortunately, we would have liked, as one of the smallest kids on the playground, to stay out of the focus of the big bully, but we were not able to do so. So Trump troubleshoot for Ramaphosa, Trump's target South Africa, and you think about it. Yes, he's holding the Land Distribution Act as one of the main reasons. But you've got to look at it all holistically. And if you look at his reasons for being, it's all about America first. And that doesn't really affect him too much. But what does affect him a lot is if BRICS becomes too strong, if the BRICS cuts ties to the US dollar. What does affect him a lot is if South Africa has got close ties to Russia and to China. What affects him a lot is if South Africa presents a genocide case against Israel. So, you never know what his true motives behind it is. But in all of this creates uncertainty. And within this uncertainty, I thought, okay, let's just talk and let's have a bit of a theme, a bit of a fun theme for today's tax chat. And a while ago, I watched a series on Amazon, and it's called The Man in the High Castle. I'm not sure whether you have watched that. There's a book about it, The Man in the High Castle. And it is what you call a dystopian book. It's a dystopian future book based on an alternative history line. So what the book is about and what the movie is about is that, in fact, in the Second World War, the Allied did not win the war. The Germans invented the atom bomb first and dropped an atom bomb on New York, and the West, or the Allies, immediately then surrendered. And what happened is that America was split in two, one part under German control and another part under Japanese control. And the whole book then plays out under this dystopian future. It's a present day book and it's a present day movie, and it's all about then what would have happened if America was split in two, like Germany was, for that matter. A part of America is ruled by the Germans, a part of America is ruled by the Japanese. So it's called the Dystopian Future Book based on alternative history line. And I thought, okay, given where we're standing, given all this uncertainty, where let me apply my own imagination, and I'm going to make my own fiction, and I'm creating my own dystopia, and I'm looking in future, and I'm saying 4 February 2027, and America with its aggressive stance against the world, and wanting to make Canada the 51st state. I'm saying, okay, let's create a dystopian future where South Africa now becomes the 58th state of the USA. And tongue-in-cheek, state of the nation, a nation that works for the USA. Now, obviously, this is a work of fiction, so please don't tell me on that. It is just a little bit of fun stuff. There's our new flag in this dystopian future, just as much as the book on the man in the high castle. And what is Trump known for? He is known for issuing a lot of executive orders. And I thought, oh, around this executive order thing, I will now do my presentation. And I thought, what would presentation be as an alternative to the budget speech? And because we're ending up February, it's close to the personal tax year. So let's talk about personal taxes. Let's talk about PAYE, because this is the time that you've actually got to get it right. February is the deadline for getting all the personal taxes right, getting making sure that you'll be able to issue your RP5s properly and do EMP 501s and get everything right. So I've done about it that our new president in this dystopian future issuing executive orders to us in South Africa around PAYE and personal taxes. And he's issued 6 executive orders, and I'm going through those 6 executive orders one by one. The first tax executive order is to prepare employee benefit forms. Now, so what is an employee benefit form? What is the benefits of an employee benefit form? When I just started with tax advisory work, and that's the early 1990s, a lot of the work was about structuring employment packages. It's all about structuring. We structured entertainment allowances. We structured the package so that there was a company car, because within the company car, I think at that stage, the company car was taxed at 0.8% of the value of the car per month. Now it's 3.5%, which is 42%, over 42.2%, something like that per year. So it's clearly discouraging people to use company cars. But in those days, we did all of those kind of things. And over time, it was all effectively taken away. An employee can't claim allowances other than 11E allowances and retirement annuity fund contributions. So all of those kind of things went away. Cell phones went away. You can't claim a deduction under 11A for a cell phone, for example. So what happened? It was all about clarity. So planning around your remuneration structure is all about clarity. The benefit of an employee benefit form is that you create clarity regarding the various components of your remuneration package. It provides clarity regarding the PAYE and the final tax implications of the various elements of the remuneration package. It provides an indication of your cash and your non-cash benefits. It enables the employee to quantify the total cost to the company. And it facilitates SARS audits, very, very importantly. So remuneration planning is all about certainty. What does that look like? Over the years, I've developed this employee benefit form, and I'll share it with you in the presentation. So essentially, this is an Excel spreadsheet. Bits in yellow are the bits that you fill in, and then the rest of it is all just populated. And in this particular case, you've got a basic salary, health allowance, retirement annuity fund, there's a monthly travel allowance, there is medical aid contributions, and there's contributions to a retirement fund. Very, very typical. What this then pulls it through to a section A, which is the makeup of your total cost to company. Now, this then shows you the elements of your total cost to company and the PAYE and income tax implications. So, for example, if you get a retirement annuity fund allowance, it is subject to tax in full, but you receive a tax deduction up to 27.5% of your taxable income, or 350,000 rand, whatever is the smallest. All right. it talks about 13th check. So often people will say, I want my 13th check clean. Then you say, okay, 13th check. But if you choose, you can actually choose to have the PAYE deducted over the period. And then at the end of the year, you get your 13th check in clean. But that is a guaranteed 13th check. Company contribution to retirement fund, it is taxable in full. And then you get certain, you still get the deduction of the 27.5% or 350,000 Rand. Company contributions to group life, taxable in full, but then when you get a benefit, you are not taxed on that. In this particular case, the travel allowance was not part of the guaranteed cost of company. In many cases, you'll just pop it up. So if you would have, say, somebody are paying you R1 million a year, you can structure up to a percentage of that, maybe 150,000 Rand. You can structure as a travel allowance, then you just move it up. That line is important, that guaranteed cost of employment. That creates certainty from an employment perspective. That creates certainty if the person goes on maternity leave, what is the amount that they will be entitled to? What is pensionable, what is non-pensionable? So that line is the line that you actually negotiate on. All right. In this particular case, you negotiate on that line and the travel allowance is on top of it. In most cases, you actually have the travel allowance structures part of cost of company, and then you do that. That's very simple. Depending on the nature of the client, we'll add in line items. There are people who've got housing and all those kind of things that will add it in the appropriate place. Calculate the employer contribution of the skill development levy and the employer contribution to the UIF. The second bit is the way you calculate the PAYE. Obviously, your travel allowance is subject, 80% of it is subject to PAYE, but 100% of it actually appears on the RP5. So the travel allowance, and as you can see there, I will have a narrative there that clearly shows the person what they should do, and there's no uncertainty about it. In this particular case, we estimated, we calculated the actual tax deduction, what the person will have in ITO 14, so normally I won't have that in the annual one. And then you've got your tax deduction to the retirement annuity fund. Now, errors commonly found, I've seen people paying, especially when you outsource your payroll. What often happens is you outsource the payroll to a place like Creston, and you don't give them all the information. You tell them, listen, we're paying person a health allowance, you're paying them a retirement annuity fund allowance. Please, if you do outsourcing services for clients, make sure that you've got proof that the person is actually making a contribution. So I've seen it in that people will pay some retirement annuity fund allowance. They give them the benefit under the PAYE, but they never make any contributions to retirement fund. They give them a health allowance, but they never make a contribution to a medical aid. So you give them the credit, and at the end of the day, you don't have any proof of that. And with the IT, with the third party reporting, then it comes out and the person must pay a significant amount in upon assessment. All right. So in this case, then you'll see that it pulls through. You'll have the tax then on after your primary rebates and your medical aid credits that you'll get. And that's an estimated PAYE. Then the third section is a cash flow estimation, because as you can see in my cost company, there are cash benefits and there are non-cash benefits. So if you do that, then at the end of the day, you say, what's your cash flow estimation? And we'll also make that right for a particular client. So cash flow, you have a health allowance, but you have a contribution to medical aid. You have a retirement annuity fund, but you have a contribution to retirement annuity fund. The employee himself pays 1% for unemployment insurance fund up to 177 Rand. And then the PAYE comes in. In this particular case, we also brought in a bit of an estimated fuel costs, because the person they wanted to see what the situation would be if they include that. But obviously, you change that as you want to. And then this is very important. If you provide somebody with a travel allowance and you want to disclose it under Code 3701, then you must make sure that person actually uses the vehicle for travel purposes. If you provide somebody with a travel allowance, they're office bound, then you can't enable them, you can't give them the benefit of the 80% subject to PAYE, but subject to 100% PAYE, because it's a travel allowance designed in order to enable a person to do business travel. That's the purpose of the Code 3701. Otherwise, you've got to put it under 3601. All right. So that is your employee benefit form. We do that for many companies, and once we've done it and implemented it, SARS audit is a breeze, it's an absolute breeze. I've had SARS saying to me, I wish every single client will implement something like that. And this is really where we start. If we do employment tax advice, we start with the contract. And the contract and the progress currently, or the norm currently, is that you keep your employment letter as simple and as straightforward as possible. And under the remuneration, you say you will be remunerated in accordance with the employee benefit form, which is attached as Annex A, and that will change on an annual basis. And normally what we do is just on an annual basis, we update it with the new tax tables, and the client will populate it for the particular person, check it, send it to the person, get signed, and everybody is booked down. And the same thing, you would then link it, for example, if you have a travel policy, if you have a relocation policy, if you have all those kind of things. All right. The second thing is the second executive order in my dystopian future is our new president says, ultimate president, let's call him the ultimate president of the Federation, treat independent contractors correctly. Now, I've had numerous over the past, well, since COVID, I suppose. So it's now 5 years now. So since COVID time, there's been a whole change in the way people work. So more people are starting to use independent contractors, labor brokers, and they're starting to use, and the distinction between a independent contractor and the employee becomes much more vague, especially because a lot of employees themselves are not working from office anymore. Then there are also then the personal services providers. So let's talk about the tax executive order number 2. And for that, you need to go and look at interpretation note number 17. It's quite a comprehensive tax interpretation note, and I've taken out some of the more important one of this. Now, one thing that's important about PAYE is that the employer, and this is an important concept, the employer is the agent of SARS. This is important. You're not the agent of the employee. The employer is appointed by law, by SARS, their principal, in order to deduct the correct amount of PAYE. Now, I've had a situation where the employer, on the payslip, they deducted tax from the employee's salary, but the employer was suffering financial losses, and they never paid that PAYE over to SARS. And then at the end of the day, the company went bankrupt. The owners went overseas. They were gone. My client, which was the employee, was sitting at that side. They had pay slips. They never got an RP5, but they got pay slips where clearly the PAYE was deducted. SARS then came to them and said, they assessed them and they said, but this PAYE was never paid over to SARS. And it was a big fight. It was a big fight. But I won the fight, as I normally do. So when the fight, and the reason I won the fight, I said to SARS, sorry, the employer is your agent. Your agent deducted the tax from the employee's salary. The fact that your agent didn't pay it over to you as the principal's got absolutely nothing to do with me. You cannot not give my employee, my client, the credit of the PAYE that was deducted by your agent, because your agent steps in your shoes. They were acting according to the will of SARS, not according to the will of the employee. Now, this is a critical concept when you get to independent contractor status, because as an employer, you are now exercising the will of your principal. The will of your principal is SARS in this case. So you need to exercise it according to the way that they reported interpretation note number 17. So now, and why is this concept of independent contractor important? It is because you will have to deduct PAYE unless the person is independent contractor. We come now to a situation if it's a non-resident, but you don't have to deduct it if it's truly an independent contractor, a natural person. Now, the interpretation note says, it is the responsibility of the employer to determine whether the provisions of that paragraph is applicable. So the employer must determine it. And then they say, and it's actually in law, you cannot get an advanced tax ruling about whether a person is an independent contractor or not. A SARS branch office is not permitted to consider applications for persons apparently falling into paragraph A of the definition of employee for confirmation as independent contractor. So an employer is in a very, very difficult situation. You are appointed as the agent of your principal, but your principal refuses to give you guidance as to how you should act on his behalf. So if you do it incorrectly, then you're going to face penalties and interest and everything, because SARS is going to say, listen, you should don't be away. You're up for an understatement penalty. You're up for a late payment penalty. You're up for interest and all those kind of things. But the principal himself doesn't want to give any rulings on this. You've got to make up your mind. So be aware of this thing. Because if you get it wrong, you can be in significant problems with SARS. But is this not almost an unconstitutional view from SARS? In that clearly, if the agent acts according to the wishes of the principal says, listen, you go and you act as if you're the principal. You decide whether this person is an independent contractor or not. It's absolute madness. It's absolute madness. How can I be the agent of somebody else? And they say to me, I've got to make up my own mind in what I should now do about the POA. That's me on the soapbox. Anyway, so look at the mind map. This is a mind map that and this is a mind map that I have adjusted from the mind map that is in the interpretation note itself. So the first question is, are you a natural person? If the answer is no, then you don't go down this route. Then you've got to go the personal services provider route, and I'll get to the personal services provider route just now. So if it's a natural person, then the first question you ask yourself is the person a resident of South Africa? If the answer is no, then the exclusion for independent contractors doesn't work. It doesn't apply. So technically, in terms of the law, if you pay an individual who's sitting in the UK for services rendered, even if he's absolutely independent, you should deduct PAYE unless if it qualifies. So you will only deduct PAYE if the source of that income is in South Africa and the double taxation agreement doesn't override it. So in the majority of cases, if you appoint somebody who's physically sitting in the UK, in France, in Germany, in Japan, wherever, the source of the work is in France, Japan, or wherever, so you don't have to deduct employees tax. So it falls out because the source of income, because a non-resident is only subject to tax in South Africa on South African source income. So a lot of it will fall out on that. Or alternatively, if it does fall in, maybe the person is physically in South Africa doing the work, but the double taxation agreement says you cannot tax me if you're less than 180 days in South Africa. So Bob's your uncle, not a big problem. However, now we get to things like non-executive directors. The source of directors' fees is where the company's head office is situated. So now you've got a company in South Africa. There's a non-executive director in South Africa. SARS has come out two interpretation notes that says a non-executive director is an independent contractor. So if my non-executive director is a South African resident, it falls out because the independent contractor, I don't have to deduct any PAYE. But if my non-executive director is a UK citizen, then it says, well, the independent contractor exclusion does apply, is a UK citizen. Where's the source of income? The source of director's fee, even if it's non-executive director's fee, is where my head office is situated. It is here in Pretoria or Van Santon or whatever. So, source of income in South Africa. Then you look at the DTA with the UK, and the double taxation agreement with the UK talks about director's fees, and it says the director's fees may be taxed in the country where it originates, where it originates. So we've got actually clients who are non-executive directors in the UK. They don't set a foot in South Africa. You've got to register them for PAYE purposes, as a taxpayer in South Africa, because they're earning income in South Africa, source in South Africa. There must be PAYE deducted of 25%, and it comes here. So be very careful about that look there. Be very careful about the source of income. So that non-resident question is a critically important question as the world becomes bigger, and especially if you've got a multinational entity. And often find that even with smaller entities, you'll have somebody and then the director says, well, I'm immigrating. So the director immigrates, is sitting in the UK, and he receives the director's fees. So therefore, we split it between services as a director and then services not as a director, because often they would also provide with you non-director services, and then you go and you may be protected under the DTA, or the source will not be from South Africa. Careful planning. Then you get into two new categories, and that's what they call the statutory tests. The first statutory test is, does the person employ 3 or more unconnected employees throughout the year of assessment? If the answer is yes, then you're automatically outside the net. It's an independent contractor. It's not subject to PAYE. If you do not employ 3 or more unconnected employees, and this is not appointing your gardener and appointing your somebody to, as a driver or something like that. It must be involved with the actual work. The answer is no, and these are outdated questions. Are services required to be rendered mainly in the premises of the client, and is the person subject to the control supervision of the client or the third party? If both that questions is no, then you go, you're not finished, you go, is the dominant impression that of an independent contractor? If the answer is yes, your dominant impression is that of independent contractor, then it is not subject to PAYE. But if the services are rendered physically at the client's premises and the person is subject to the control or supervision of the client, then you go, is the dominant, you still must do the dominant impression test. So people don't understand that they still must do the dominant impression test. The SARS guideline just goes straight on and say, well, then you deduct PAYE. But it's important that you then still do the dominant impression test. Why? Because you're going to know in which code you have to disclose it. If the dominant impression is that you are an employee, then you must put it under code 3601. If your dominant impression is that the person is truly an independent contractor, then you put it under code 3616. Why is this? So as employers, they say, well, I've deducted my 25%. I've deducted my 25%. Whether I deduct my 25%, because the person, why should I go there and deduct 25%? The difference between 3601 and 3616 is critically important, because if I'm the person and receive a RP5 and it's under 3616, then Section 23M limitations does not apply. Section 23M says, if you're in employment, you can only deduct 11E, you can only deduct 11C, you can only deduct certain refunds, and then you can only deduct the home study, and under the home study, that you must look at 23B. So you're limited to those deductions if you're under code 3601, sorry, under 3601. If you're under 3616, you can deduct cell phone costs, you can deduct entertainment costs, you can deduct taxi fees, you can deduct all of those kind of things that you can deduct. So if you get this wrong and you put the person under code 3616 when it should be on 3601, you're enabling persons to claim amounts that they not should otherwise be claimed. Okay, so you get the statutory, the common law test. Please, we will distribute these slides. Have a careful look at this slideshow. Right, so under the RP5 disclosure, SARS talks about the 3616, which then says 23M will not apply. But when you look at this example, so look at this example in the interpretation note. Z is an independent contractor under the common law test. Now, this is very important. He's an independent contractor under the common law test. He provides services mainly at the client's premises and is subject to the control and supervision. They do not employ more qualifying employees. So remember, he's an independent contractor under common law test. So that's under the dominant impression test. So Z will be deemed under the statutory test not to be carrying on independent trade for purposes of the fourth schedule. Accordingly, employees' tax will be deducted from the amounts paid. However, because Z is an independent under the common law test, the remuneration will be coded under 3616 on the RP5, and the limitation of Section 23M will not apply. If Z was not regarded to be independent contractor in the common law test, this is important. So if it was not regarded an independent contractor in the common law test, the remuneration would be coded 3601 on the RP5, and Section 23M would apply. So that distinction there is absolutely critical, because it will either allow the person to claim expenses or not claim expenses under Section 23M. Okay, so please go and look at that very, very carefully. So what's a common law dominant impression test? You can look at the slides, which is an extract from, but there's no single factor that is conclusive. They've split it into three categories. There's near conclusive, then persuasive, and resonant. Okay. So let's just look at what they're saying. But they are also saying that if a SARS auditor now comes and audits you, so the principal, your principal, comes and audits you as your agent, and they go and see, have you now applied your mind properly? Now remember, that principal is not allowed to give me an advance ruling on whether this person is independent or not. But he comes here with the benefit of hindsight, then he says, okay, give me a detailed motivation as to why it would not apply. And it's not sufficient to merely record a gut feeling. So the onus to prove that a particular person is not a independent contractor or is an independent contractor rests on you. So now, this is the near conclusive ones. So you can look through that, but let me just give you a bit of idea of how this works. So one of the examples that SARS actually give is that of part-time lecturers at a university. Now, I'm saying that because I've personally done training courses for SAICA, I've done it for SAIBA, I've done it for SAIT, I've done it for the University of Pretoria, I've done it for certain colleges. So when I do that, there's a distinction. If I go in as Johan Heydenrych or as Creston South Africa Director, I go there as independent contractor. They'll introduce me and say to me, this is Johan Heydenrych, we being site or tax faculty or SAICA or whatever, we do not take responsibility for whatever he says. I use my own intellectual capacity, I develop my own course, I present it to them. Now, that is an independent contract. If you employed somebody and you say to them part-time, you work from home, wherever, it doesn't really matter, use your own computer, use all those kind of things, but you used to use our curriculum and you take charge of the BCom honors tax degree, please. Then that person, yes, he uses his own computer, he doesn't work at the office, but he gets his instructions from the employer. That part-time lecturer gets, he must use the curriculum of the university, and that is the university's property. So you may say, but I've got my own computer, everything. Yes, but what curriculum do you use? You use your own intellectual capital, use the university's intellectual capital. Also, part of this is, and they've not necessarily disposed of it, but for me, it is, if it walks like a duck, it quacks like a duck, it's probably a duck. So if you look at it, what is the optics of it? If that part-time lecturer is saying racist things, or that is that part-time lecturer is sexually harassing a student, or is doing inappropriate things, the university as the employer will be held liable for that. If an independent contractor comes in and does that, what the university will do is just say, listen, we're not going to pay you, go off, you're never allowed here again. All right. But there's a difference. The university won't be held liable for that. I will personally be held liable for that. But when you see the difference there. Payment regime, if I were to do work for SAICA, they'll say, okay, do it. And at the end of the day, after I've done it, I'll say to them, are you happy with the presentation? Say, yes, we're happy with the presentation. And then they'll pay me for that. If I'm getting paid a fixed amount of 10, 20,000 Rand per month in order to take charge of the BCom honors tax degree, then I get paid on, and then they pay for my ability, my time. Whether or not I deliver, whether or not they're on holiday, whether or not. So a lot of those things. The person who must render the service, if Creston is appointed to do a particular course at a client and I am sick, I can ask an associate director to do it on my behalf, and the client will be happy about that. All right. So there are different factors. I'm obliged to be present. Look at this carefully. So remember, if you have one or two answers, no, but you've got to look at it in a detailed manner. So you look at it and you say, but hang on, indication says to me, this is not an independent contractor. So this is the dominant impression test. There are then other things, your structural location, there's persuasive things, and there are relevant issues as well. All right. So SARS have given us guidance on the employer's tax. There's the guide for employer's tax for 2025. Now, this is also where SARS makes it a bit confusing, because now you go as a person in payroll and you say, listen, now I've got an independent contractor, but I've got to deduct PAYE, and what code must I? They go, deemed independent contractor, put it on 3616. But remember, that's only the deemed independent contractor. If the person is truly an independent contractor, you don't deduct any tax at all. But even if you go through that, it's only when a person under common law is an independent contractor, but he is deemed to be an employee. So this is convoluted, because the heading there should have been deemed employee. This is a true independent contractor, and you're deemed an employee. Then you put it under 3616. All right. Anyway, so that is the summary of it. Now, Why is it important? I'm hammering again on the 3616-3601 code because over recent times I've had many situations with that where people are very unhappy when code is 361 and not 3616. And that is because, and if you're an employer says, oh, well, potato, I'm deducting my 25% tax, I'm not going to worry about it. You have to go and look at section 235. Person who, with intent to assist another person to evade tax or to obtain an undue benefit under the tax, makes or causes or allows to make a false statement or entry in return or document um, without reasonable ground for believing the same to be true, is guilty of an offence upon conviction, is subject to a fine or imprisonment not exceeding 5 years. So, any person who makes a statement is, you are deemed to be guilty, okay? Unless the person proves that there's reasonable possibility that he or she was ignorant of the falsity of the statement and that ignorance was not due to negligence on his or part, is to be regarded as being aware of the falsity of the statement. So you are deemed to be guilty until you can prove to say that, no, sorry. Now, you are now warned. You are now warned. Whoever is listening from a payroll department, you are warned. Be aware of this. When it gets to section 235 on sources, I think they'll only apply it in extreme situations because their own guidance is so convoluted, as you can see. They themselves don't want to give you guidance. So probably you'll sit there, but remember now, 3616, very, very limited situation. If you're truly an independent contractor, if you don't work, for example, at their premises, you're not physically at the beck and call, then there's no tax. There's just nothing. So if I'm a guest speaker or guest lecturer at the University of Pretoria, for that example, and I'm working from home, then I can't be a deemed one. Under common law, I am not one, and then there's just no tax. The fact that you deduct 3616, I can then be unhappy about that. All right. So that is Tax Executive Order number 2. So Tax Executive Order number 3 is amend procurement procedures to identify personal services providers before appointment. All of this is all about the procurement processes. At the time that you are, because a lot of this doesn't go through employment processes. So when HR gets hold of it, they normally kind of like, there you payroll, we deducted, all those kind of things. This is in procurement. So identifying independent contractor, identifying personal services provider is an important procurement process. So the second one is put in processes so that you can identify personal services provider. So the first thing there that you ask, is the supplier a company or trust? The answer is no, then it cannot be a personal services provider. Then you go to the independent contractor. Then you say, are the services rendered personally by a shareholder of the company or beneficiary of the trust? If the answer is no, then it's not a PSP. Are 3 or more full-time employees engaged in rendering the services? Yes, it's not a personal services provider. Would the person rendering the service be regarded as an employee if their service was rendered directly? Yes, it is the personal service provider. Club, then finished. The answer is no. Are the duties performed mainly at the client's premises? And is the person subject to control or supervision? Yes, it is a PSP. And this is the catch-all. You can be as independent as can be. Thus, more than 80% of the income of the person consists of amounts received from one client or associated institution. So often what happens is that somebody will do tax, there'll be a tax advisor, and they get a nice big group of companies. They say, you do your own thing. You create your company, you're the sole shareholder, you do tax advisory services through the company, and you now start getting a group of companies, say Marlow group of companies, or a large one. And it starts consuming you, and you may start only with 20% of your income, but before you know it, 80% of your time gets done just by that one client. You may be as independent as it is, but you're a personal services provider. Right. So what happens when you are a PSP? Remember, this is anti-avoidance legislation, and what it's aimed to do is to get people not where the work is normally done by employees or by natural persons to not disguise it through the company. So it's to look through the company and say, well, it's actually an independent person that does it. So the first thing that you do, now you pay somebody 100,000 Rand a month. First thing you must deduct 27%. So in the company, there's no 73% over. The company can only claim a deduction for, in essence, the salary, employment costs, legal costs, bad debts, and any income that needs to be refunded. That's it. That's it. That's all that they can deduct. And now you take the money, you've only got now 73,000 rand left. Now I want to pay a salary to the person. You've got to deduct PAYE of the salary of the person. Um, and you can only pay him 73,000 rand. So there's a double tax. There's a 27% tax as well as a PAYE indication. So from a PAYE perspective, it is absolute madness. If obviously you put it in and you pay dividends out, then you can do that. But then you hit 42.2% odd percent there. So it is. So what happens when you hit the PSP in your procurement processes? As you get to the conclusion that's a PSP, don't just point the person and say, well, we're going to deduct 27%. Go back to the person and say, listen, according to us, you're a PSP, we're going to deduct 27%. Shouldn't we rather do something else? So it is a bad thing to be a PSP because you don't get any real benefits, because it's anti-avoidance and it discourages people from operating through companies, where the company then would claim expenses that they would not otherwise do, because they'll do stuff like, okay, I'm going to rent your garage from you as an individual. You know, they do stuff like that. All right. The executive order number 4, and this is quite important as we are getting into the year end, to treat travel costs correctly. All right. From a employment perspective, from a payroll perspective, you need to make sure that it gets into the right code. If you pay a fixed travel allowance, then you must deduct tax on 80% of it, and you must put it on the code 3701. 100% must go in 3701. And I'm going to say that I've seen clients where they only put 80% on code 3701. They deduct tax and they put only 80% of it on the code 3701. No, you must put 100% in the code 3701. You get a petrol card. Now, that's one of the biggest risks that you have, is these things that goes outside the payroll. So in the payroll, yes, you get your fixed travel allowance of 10,000 a month, duly onto your pay slip, duly taxed on 80%, duly on the 3701. But there's this main garage card, and you just put in fuel left, right, and center. It could be this e-tag for your toll fees. Nobody worried about it, the e-tag on the toll fees. They put it on, and the company pays it, and off you go. The people in payroll don't even see it. So you've got to have procedures in order to make sure that those things go back to the payroll. That must also be on 3701. Tax must also be deducted on 80% of it. No doubt about it. I've seen people in saying, especially smaller companies, and say, don't worry, I'll pay for your service of your car. So somebody takes the service for the car, they put it through the company's books, and there's a service of a car, 8,000, 10,000, or whatever. All right. So the third category, reimbursed at not more than prescribed rate per kilometer, which is now 484, and no other compensation is paid. That must still get its way to the payroll. I remember when I just started doing work, when I did VAC work still in the olden days in the late 80s. You will travel in an accounting firm, you'll travel to a client, and you go with that. After you've traveled, you go to a little office there, and there's a guy with a cash kitty. And you say, listen, I've traveled 20 kilometers, and you go out, you submit the slip, and they'll pay you the cash out. That must get onto code 3703 so that it can be recorded. But there's no PAYE on it, and you won't absolutely, and whatever's on 3703, you don't have to substantiate the deduction in your tax return. So in RTR 12, you don't have to substantiate the tax deduction. There's no PAYE on it, but it must still be recorded on it. So if you're reimbursed at a rate exceeding 484 and no other compensation was paid, then on the portion up to 484, no PAYE, it goes on 3702. Portion above it, you deduct 80 tax on 80% and you put it on 3722. You must still, in your tax return, under those codes, you must still submit your logbook, claim a deduction in your tax return. All right. Reimbursed at a rate exceeding the prescribed and a fixed travel allowance is done. Your fixed travel allowance, that's as above, 3701, pay tax on 80% of it. Portion above 484, 3722, you deduct tax on 80%. Up to 484, no amount, but it goes in 3702. In your tax return, you must still keep a logbook. So in your logbook, the only time that you exclude it from having to submit the logbook is if you only receive 3703. So that's the only time that you can have that. All right. So you can have the guidance. I've just created the link in there. sorry, there's just a mistake. It used to be 418. It's 484. Now, interesting. So what happens if you get reimbursed for taxi, train, Ubers, flights, all those kind of things? Because what happened is in when was it 2021 when we had all the riots and things in KwaZulu-Natal and Gauteng, everything. The banks especially was targeted. So you would have a bank in a particular suburb that was totally destroyed. Obviously, they didn't say to the employees, you can just stay at home or we're going to fire you or whatever. They took the employees and they said to them, please, guys, you need to go to the head office, the regional office, or we will redeploy you to other branches. Now obviously, they employed, for example, in the Kempton Park branch of a particular bank. And the Kempton Park branch is now destroyed. So they say to them, listen, we want you now to go to the Bedford View branch. And the person said, but that's business because my place of work is Kempton Park. And they say, okay, we'll pay for the taxi, don't worry. Then the question came in, what must we do? So if the rate per kilometer is less than 484, whether it's taxi or whatever, you just pop it under 3703 and there's no tax. So that code is, it's only once you get to 3701, the fixed amount. But here, if it's less than 484, then you can put it under 3703. So nothing prohibits you to put under 3703 reimbursement of taxi costs, train, Ubers, all those kind of things. But you must still determine how much am I paying. If I'm paying up to 484, goes 3703 and I don't get any other amount. If it exceeds 484, you have to put portion up to 484 under 37002, and then the portion over 484 and 3722, and subject 80% of the tax. And then that person must keep track all the taxi costs and all the train costs and all those kind of things so that they can claim a tax deduction. So whenever something like that happen, you can reimburse a person. I would rather say reimbursement up to 484. So you can say, sorry, you've got to go from Kempton Park to Bedford View. It's so many kilometers. We will reimburse you at R3 kilometer. We don't care whether you use a taxi. We don't care whether you use Uber. We don't care if you use a train. No matter what it is, we will pay you that amount. All right. So you don't necessarily have to have a car once it's into 3703. All right. What else? What is business kilometers? So this is very important because as you are doing your logbook, and obviously now you've got to get your logbook right. And remember, on the 28th of February, you've got to keep your closing kilometers. What I normally do is I take a picture of my booklet, of my service booklet, and then I write in between the two services. If I've serviced it in maybe December and I service again in June, so I take a picture and in between I say kilometers on 28th February that. And then I take a picture of that and I put it into my tax pack because I was asked for it, and then I send it to SARS. Now, what is private kilometers? What is business kilometers? Home to office is private. Office to home is private. Now, this is important. Home to client, site, office, or airport is business. Client to site, office, airport to home is business. Client, site, office, airport to office is business. And office to client, site, office, airport is business. Right, so I live in Kempton Park. Our office where I'm sitting right now is right opposite the CSIR's building in Equestria. So we are literally between the CSIR and the highway. Here's our building. I traveled this morning. I traveled from home. I came directly here. This is all private. I've got a client that is situated in the CSIR's building. So if I now go from this office to the CSIR, I've got maybe 700 meters of business kilometers, not even a kilometer, not even enough to worry about. But if I go from home directly to that client, even though it's literally 500 meters from office, everything is business. Now, so planning your trip so that you can have as much as possible business trips is quite important. So I will be stupid if I come from home, and because I do client work, 99% of my day is client work, I'll be stupid to go from home to Crystal's premises. I'd rather go from home to a client, and I've got many clients around, so I'd rather go from home direct to a client. After this, I've been to a client that's just off Rigel Avenue, but it's much better for me to go from home directly to that client. That's all then business. If I go from that client then back here, which is maybe 5 kilometers, that is business, and I go from home home, that is private kilometers. I'll be stupid to plan my day that way. I'd rather go from home to the client, that's business. From that client to office, that's business. From office to another client, that's business. And from that client home, that's business. 100% business travel in that day. So plan your day appropriately. Plan your day appropriately. Let me illustrate a few things. Um, this is the way that SARS says you must do your logbook. Okay. Now look at the bottom. These fields are not compulsory. People are saying, "Oh, no, opening kilometers. You've got to record opening kilometers." No, you don't. You don't. You only have to record the date, business kilometers, from where to where, and the reason for it. And those last two you also don't have to do because you do deemed. So what I do is I take an Excel spreadsheet. Beginning of the year, I just take an Excel spreadsheet, open it here, and from the beginning of the day, I just set each day down. And I block out weekends, and I block out, not that I don't work weekends, but if a weekend I seldom will travel to a client. Um, but I will block out my holidays, and I'll block out public holidays and everything else there. And then on a particular day, I'll just say where I traveled. So I'll just say, okay, I went to client in Rigel, reason is tax advisory services. I'm not going to put there, I have advised this client on claiming a tax deduction on legal fees. You don't have to go that. It's tax advisory services. Um, so doing it that way, and I try to use, because people are people of habit. So all know, um, home to a client in Midrand, that is so much. So I've got standard kilometers as well. And I put it in on that basis. What's the impact of this? Let me just show you the impact and what is important as you claim a deduction. Assume you've got a car with a cost of 510,000 Rand. Per the table, your fixed rate is 163,000 Rand, your fuel cost 243, and your maintenance is 0.96. Now, let's assume in this case, your business travel is fixed at 2,000 kilometers. It's just 2,000. If your total kilometers is 5,000 kilometers, you will get a 72,000 Rand deduction for 2,000 kilometers. Now, if your total kilometers is 25,000 Rand, you'll only get a 19,000 Rand deduction. Why is that? Because your fixed rate is divided by the total kilometers. In all of these instances, you've got exactly the same car. You're traveling exactly the same business travel. Because your private travel is more in certain cases. Look at that. Your deduction moves from 72,000 Rand to 19,000 Rand. So what's your rule? It's all about percentages. You want to have your percentage travel as high as possible to be business. Okay. So if you have two cars, limit your private deduction to a separate car. It doesn't mean you can't claim for both cars. You can actually claim for both cars. Doesn't matter. Same rules will apply. You can use two cars interchangeably. So I've got an old BMW that I use primarily for business. Primarily for business. That's all I do. And then I've got a Pajero Sport that we use primarily for holiday purpose, and my wife drives around. But every now and again, I will use the Pajero Sport um, for business. If I have to go to a client, for example, in Nelspruit, then I'll use the Pajero Sport. So I can claim on two cars. But can you see there, what you want to do is you want to keep your percentage business travel as high as possible. This is another illustration. Here is your total kilometers is the fixed, it's 20,000. But if you can manage to get your business travel as high as possible, if you travel 20,000 kilometers in total, if you only have 2,000 business kilometers, you claim 23,000 Rand. But if you have 10,000 kilometers, you claim 115,000. It's one of the last things that you can actually do in order to minimize your tax affairs, and that is to do your logbook properly, keep it properly, know what is business travel, and do your daily planning properly. Don't be stupid. Don't come to office here. What I should have done was just to do this recording from home and then come to my client, because after this I could have come to the client. But now I've come to office in order that I can do the presentation. That's now private, but it's not cost me money. It's not cost me real money, because if today I was just doing this recording from home, and then I got in the car, drove to Rigel Avenue, that would have been business. After that, go home again, all of that would have been business. All of that would have been business, especially if you live far from work. All right. That is then that executive order. Let us go to executive order number 5. Employees shall claim very limited expenses, home office expenses. Home office expenses sounds almost like a default. They will deny it, and then just give query upon query upon query upon query. And I'll call it, there are source whisperers down here that interacts with SARS. They are absolutely brilliant in doing this. So if you are claiming home office expenses, get somebody that knows what they are doing. So we've been, as Crestron, very successful in doing that. Personally, I don't even bother about it because this interpretation note is so narrow. But let's look at the law. And actual fact, it's the law that's not narrow, not the interpretation note. Don't blame SARS. SARS, unless they make a mistake, unless they make a mistake. But don't blame SARS. Blame the legislator. You can't blame SARS for the VAT rate increasing from 15 to 17%. Hopefully it won't happen. You've got to blame the legislator for it. This is the legislator. So you've got to look as an employee at two relevant sections. The one is section 23M. It says that if you're on employment, remember now, if you're in 3616, this section doesn't apply. If you're in 3601, this section does apply. If you're on employment, only thing you can claim is a contributions to a pension fund, provident fund, retirement unit fund. You can claim, look at those sections, 11C, which is legal fees, 11E, which is your wear and tear allowance, not 12C, not 12B, 11I or 11J, which is bad debt and doubtful debt. That's all. So if you have a cell phone that you use for business purposes, you can claim the cost of the handset, but you can't claim the cost of the calls. Absolutely madness. Yeah. Any deduction which is allowable under 11 A or in B, that is refunded income. And then any deduction which is allowable, and look at that, under section 11A or 11D. 11A is your general deduction formula, or 11D is your repairs. That's for home study allowance. So that is under 23B. So if you're an employee, you can only claim certain limited expenses. Here's 23B that comes in, and that is your home office expenses. So this is a very complicated one, and I try to unravel it for you. All right, so I've got two slides here that can unravel it here. So the first thing is more than 50% of the employment duties performed from this part. So if I work from home, so more than 2.5 days in the week. If I work 1 day in the week from home, doesn't help. It's not just you don't have to work. Remember the question, it's more than 50% employment duties performed from this part. Often now the employer gives a letter and says, I hereby confirm that the person can work 3 days a week from, he does not, you can't say he must work from home. As an employer, you can say he's only required to attend work in the workplace for 2 days in a week. You can't say where he's going to work the other time. If you're going to work from a coffee shop and not in that part, you won't comply with that. Right. So if the answer is yes, I'm working more than 50% from home office, then you say, is that part? Now, part, it can be a part of a bigger site, but it must be specifically identifiable. That is the part specifically equipped for purposes of the trade of the employee. If the answer is no, no allowance. So it should be specific. Now, if you're an accountant, then the specific things for you, my computer, printer, maybe a screen, maybe a table, maybe a bookcase, something like that. But then this is the trigger. This part regularly and exclusively used for the purpose of trade. So the example they give in the interpretation note is that you have a study, and in the study you have for maybe a big TV screen that you use for your Teams meetings and everything. But over the weekend, your children use it and they play video games on the TV. Then it's not used exclusively for purposes of the trade, so you don't get any allowance. Often that happens, you'll have a study, there'll be a little bed there. If one time in a year you have a guest and that person will sleep there, it's not used exclusively for the purpose of trade, because it's then almost like a joint purpose for use it as a guest room or not. So somebody's like very, very triggered on that, and I want photos of it and everything. The answer is yes, then you may claim qualifying expenses only. So if that first answer is more than 50% of the employment duties performed from this part, if the answer is no, you're not killed, you're not dead. You say, is the income from employment derived mainly from commission or other variable payments which are based on the taxpayer's work performance? If that answer is no, then you don't get any allowance. If the answer is yes, then you go back to the normal. Are the duties mainly performed otherwise than in an office which is provided by an employer? You'll see the question is different. There, you don't have to perform it at that time at the work, because there you can work from clients, you're a traveling salesman, whatever. So the first question on this one, are you working more than 50% from that part? So you get a fixed salary, you must work more than 50% in your home office. If you get a variable salary, you can work, as long as you don't work more than 50% of the time in your office at employer, then you go down this route. If the answer is no, no allowance. Is the part specifically equipped for purpose of the trade of the employee? If the answer is no, no allowance. If the answer is yes, again, is it regularly and exclusively? So you must use it regularly. So even if I'm a traveling salesman and I say, well, I only work at clients and I only work there, then I don't regularly use this for business purposes, but then almost have it dedicated for that. I can't allow my children there to play video games on the weekends. And then you claim qualifying expenses. I apologize, I'm going over somewhat on the time. I would go on for another 10 minutes if that is fine with you. But I hope that you're getting some value out of it. But I do think it's important that we just think about these things at this point in time. All right. Then what is qualifying expenses? So the interpretation goes on a long things. If you know your law, those are few things. Expenditures not prohibited under Section 23M. So that's Section 11E, wear and tear. Section 11C, legal fees. Bad debts, doubtful debt allowances, those 11NA and NB, that's where employer pays you salary, and for some reason or other, you've got to refund it. And then 23B, you only get a deduction under Section 11A, which is your general deductions, and a Section 11D. Now, it's not what's there, it's what's not there. 24J is not there. So SARS is saying that you cannot claim interest on your mortgage under 23B, and SARS is actually correct, because you claim it under 24J, you don't claim it under 11A. Where the hell is 24J? 24J is not there. Again, blame the legislator, 24J should be there. You can't claim 12C, you can't claim solar 12B, you can't claim 12BA. It's not there because it's not allowed. And it must be in respect of rent, cost of repairs, or expenses in connection with any dwelling house or domestic purposes. What you can claim is a portion of your cleaning expenses. You can claim portion of the insurance, but you can't claim mortgage insurance because that's life insurance. So you can see the record keeping, and it's again funny. You have this, they're saying in the interpretation that, sorry, you can't claim your interest in the bond. And then they say documentation supporting the incurral of each expense, for example, the bond statement reflecting the interest portion of the mortgage bond repayment. Why have it there when you've just concluded you can't claim interest? In the interpretation note, they say you can't claim the interest. And then they say, well, you've got to give me the document reflecting interest portion. It's contradictory. It's the same interpretation note. Madness, absolute madness. Then the last one is the Tax Executive Order number 6, thou shalt not make mistakes. So this is just what is commonly found errors, what we have found. I've seen, especially on outsourced issues, a lack of communication. Communication. I do not believe in faceless consulting. I get in my car, that's why I travel so much. I get in my car, drive to a client, I sit around the table, we talk. Because now you look there and they send it out to you, they say, there's a retirement funding allowance, and you think, oh, that's a retirement funding allowance. Okay, let me give the guy the benefit of the PAYE of 27%. He never makes any contributions. You get a retirement fund. The employer doesn't check that he uses the money in order to actually contribute to a retirement annuity fund. The person to whom it's outsourced never checked that he gets a confirmation from Sanlam or wherever that he is making this contribution. And the same applies to medical aid. The big issue, costs outside the payroll. Costs outside the payroll. Gifts at year-end functions. And I think it's not a biggie, but I've seen people giving GoPros at the year-end function. I've seen people giving very expensive gifts, Carol Boys gifts at the end function. It's taxable. It's taxable. I've seen people giving, and especially your branded companies with recognizable brands. There'll be special events and they'll give them like branded jackets. That's taxable. Appreciation awards in kind in an overseas trip, for example. Credit cards that's used for private expenses. Spouses accompanying employees on business trips. That is a tricky one, especially your senior people, because often what you'll have is you'll have the financial director inviting. They may have a specific event for customers and the customer spouses. And then you beg your wife to please, or your husband to please go with you, because that person needs to actually act as a host for them, because otherwise you're not there. And they go there, but now SARS will say, but hang on, why are you going to the Serengeti with your spouse, we're paying for your spouse? Then the onus of proof. What I normally do in this situation, I then say, okay, all the spouses, here is a list of your responsibilities. If you don't agree to those list of responsibilities, then sorry, you don't go along. Then I'm not going to pay. Your list of responsibilities would you be, for example, you uphold our ethical values. Secondly, you will act as a hostess or a host for the spouses of the clients, especially. Fuel and maintenance of private expenses. When I do due diligences, often first thing I'll do is I'll pick up the fixed asset register and I'll look for expensive cars. If there's a Range Rover or BMW X7 as a pool vehicle, really, really, are you really, shouldn't it be subject to PAYE, 3.5% per month? Meal allowances as opposed to free meals. If you are, and I've had a client, and I looked at the payroll, and they on the payslip, there's meal allowance 600 rand per month. And when I looked at it, I said, but it's not taxed. And they said, yeah, but a meal to your place of work is free. And they said to me, but I said, but this is not a meal. This is cash. This guy, he's got cash. The fact that he may or may not use it to buy meals is irrelevant. This is cash. You've structured it incorrectly. I've seen companies then have a canteen, and then at the canteen, this person and this person can use his meal allowance. So what they normally do is they'll either give you little tickets or they'll put it on an electronic version, and they can use that in order to buy non-food items. They can buy little gifts, little bears or maybe flowers, all those kind of things they can buy. It's only that it only applies to meals. In the olden days, I've seen them people giving a little book out, and the book is 10 rand, 10 rand, 10 rand, 10 rand. Then you go if you buy something for 25 rand, and you give 3 tickets of 10 rand each, and the person will give you cash back of 5 rand. And they try to say that that's a free meal. So the implementation, critically important. Why is that so important? Because if you get it wrong, it's often you can't recover it from the employee. So let's assume you have paid you have provided persons with the travel allowance, and let's assume then you've given them each a fuel card. Now, over 5 years, if you add all those people together, you have paid fuel of 1 million rand. Now you go, there's no ways now I'm going to recover that 1 million rand back. And let's assume it's all for executives and then marginal tax rate 45%. Now you want to come clean, or SARS comes and look at you. So obviously, you deduct the tax on it. Now you can argue that they should only have been taxed on 80% of the 1 million rand, but the fact that you've not prepared the RP5 correct, so SARS never got the rest of it. So you should actually say the PAY on the fuel is 450,000 rand. But then you say, but I've now given the person 1 million rand because the tax, that 450,000 rand is actually the liability of the employee. I can now go and recover it from the employees. If I choose not to recover it and to pay the 450,000 rand on their behalf, then that's a fringe benefit of paying a liability on behalf of the employees. That is 368,000 rand. So look at that. If a person is at the marginal rate of 45% and you give them a benefit of 1 million rand, in order to get clean, it's going to cost you 81.82% of that amount if you do not recover the money from the individual. So it's so critical that you get this right. It's absolutely so critical that you get this right. I want to thank you for your attention. Apologies for going 8 minutes over the time. Let us see what happens at our Government of National Unity. So perhaps this is now exactly, it would have been the 30th time that I have uninterruptedly done budget speeches for 30 years going, and this is now on this anniversary. I can't do a budget speech on the day that's dedicated. It's the first time ever. I will do the next one. Hopefully that will be on the 13th of March. But please watch out. Please keep on supporting us. Thank you. I've seen we were about 150 people that attended. We really appreciate your support. We appreciate your support for Creston. And hopefully, please drop Emil an email if there's any specific topics you want me to address. As I said, we're going to do this on a monthly basis, and I'd love to see you on a monthly basis. Thank you so much for your time, and hope you have a very lovely and a dry day. Goodbye.